Hey guys, good afternoon, everybody. This is the K2 group mentoring session, so I will be setting up the room real quick, and then we'll get started. We're scheduled to start at 2. It's 1:56 right now, so I'm getting on a little early to get everything all set up. Just get everything here going, and then we can get started with our session for today. All right, it is Tuesday, February 22nd. It's about 1:57 p.m. Market's about to, I think it's already closed actually for swap. So market's technically going to die down right now. And then it should be back in about an hour or 2 hours, depending on which asset you guys decide to trade. So let's get everything all set up here. Looks good. Let me get this link sent out to you guys here in the premium. All right, looks like we're good to go, guys. So we got a few minutes for people to make their way in. All right, cool. People are making their way in right now, guys. So I'll give it a few minutes for people to join. It's 1:58 right now. Technically, we're supposed to start at 2, so I'm getting started a little early just to get everything all set up. Make sure we have enough time to answer everyone's questions. All right. So let's give it a few more minutes. All right. It's about to be 2 o'clock. So good afternoon, everybody. Hopefully you guys had an okay trading day today, trading week so far. We didn't really take much today. I didn't trade yesterday at all, so I'm a bit in the negative today, which is fine because it's like the first day of the trading week. I don't normally, we're not in this position, but it happens, you know. So if you guys have any questions, feel free to put your questions in the chat. You know, the session's pretty much for you guys. Whatever you guys need help with, if you guys need me to cover any strategies, cover any risk management, cover any questions regarding FTMO, anything like that, pretty much anything trading related, you know, I'm here to answer whatever questions you guys have. Anything specific, if you guys want me to cover any trades that you guys possibly took today, I can probably review them and go over, you know, what could have been done differently or if there were any mistakes made when identifying an entry. So I'll give it a few more minutes. I think it's still kind of early. There's only 12 people in here right now. So I'll give it a few more minutes for people to make their way in. Some people tend to come in a little later. But if you guys do have any questions, feel free to put your questions in the chat. And as soon as we get questions, I can start going over whatever you guys need help with. So I'll leave it at that for now. Oh, one thing that I was going to go over. So today, that trade that we took, which lost, which was like at 7. So one thing that I didn't notice, or I didn't really check off when we were looking for the trade here, was that price was bouncing off an order block. We tend not to look at that directly, but it's something that it's worth taking a look at because the trade that we took earlier could have been easily avoided. So first off, I'll go over that, and then I'll go over the breakout this morning because some people are asking if I can review the breakout. So the trade that we took earlier was like, think it was right here, right? So this was a version 3 variation that we took right here. And this trade lost for a number of reasons. For one, it was right at news price. So if you guys remember, we had news at like 7, or I think it was like 7 o'clock. Yeah, 7 o'clock, like right here. So price was like at news price over here, where it was breaking past news price. Also, a couple red flags here also were that, so one, it was at news price. I think it was near like opening price too at 6:30. Well, anyways, that's not the main thing that was the issue. The main thing that was the issue here that we didn't really identify was an order block. There was actually an order block that was right here. Let it load right now. So there was actually a couple order blocks right here. There was 2 order blocks right here that I failed to identify. I mean, it's not usually a main thing that we look for anyway, so it wasn't something that I was necessarily looking out for, but there was a couple order blocks that were right here, which if I was paying attention to these order blocks, I probably would have just avoided this trade here. So as you can see, there were 2 order blocks right there, and price kind of came down slightly. It bounced right off the order block, and then it completely reversed. Everything else here kind of lined up. So there were a lot of different reasons why we would have taken this trade. Bias was clearly for a sell. The only thing is that we missed out on its order block. Also, a couple other things were that we didn't look for price to close below the pivot. So we did have a bias with regard to fundamentals. We also had a bias with regard to retail sentiment. However, for the technicals, price was above the pivots and the trend meter was green. So there was some conflicting analysis here. Also, the order block was right here. And as you guys can see, as soon as it hit the order block, it made a complete reversal to the upside. However, you can see that right after this happened and stop loss was hit, price came all the way back down to the profit target. So, I mean, there's a lot of different things that could have been done differently here. I think a lot of us were just impatient, especially myself, because it was getting close to 8 o'clock and I kind of just wanted to squeeze a trade in. And as you can see right here, it went straight to TP and right below it. So it was just an unlucky trade, but that was just one thing that like some people were asking about if we took the order block into consideration. But one thing that you guys need to keep in mind is that you guys have to take risk with trading. You guys can't be overly careful. I know I'm pretty careful a lot of the times, but you can't be overly careful. If you have too many things to look at, you're not going to take any trades because you're just going to be scared to take every trade, right? So it is what it is. Losses are going to come. But as long as you guys use proper risk management, you should be fine. Applying this V3 strategy, it's a 1-to-1 risk to reward. So with this loss right here, it's fine. If you take another win after using a 1-to-1 with proper risk, then you'll bounce back pretty easily with one trade. So it's not really a big deal. But I know some people asked if I can go back and review that trade. So a couple of things to look at there. So Mauricio is asking if we should add order blocks to the criteria. I don't think so, because just like I mentioned right now, Mauricio, if you add too many requirements, the V3 already has a lot of requirements as is. So going to the V3, which is right here, we already have a lot of requirements. We're identifying high lows. We're looking for specific requirements. Sorry, right here, my dog digging in the background. Oh, sorry, 1 second. This is going crazy. He's trying to dig through my carpet. Yeah, like I was saying, we don't want to add too many requirements here because if you do that, then you're just not going to take any trade, right? The problem with the order blocks is that order blocks will come up like in so many locations where it'll, if you see order block somewhere, you're probably going to just skip the trade. But there's some instances where price will go through the order block. It doesn't always bounce right off it. The order block kind of acts like one of the sessions that we have or one of the price points that we mark up. So it's not necessarily, let me see if I can find an example here. So again, right here, see how we have the order block right here? See how, like, if you would have avoided this, say, for example, you had a sell right here, right? Just, there's no trade here, but say, for example, we already have the order block marked up right here. And say there was a trade here. I know there's no trade here, but if there was, and you're using an order block as a criteria and you skip the sell here just because it's at an order block, you would have missed out on a good trade because price went right below, right? So I don't think order block's a good requirement for the criteria. It's a good confluence where you can add to increase your probability of winning, but I don't think it's one that you should necessarily add as a requirement, because the thing is, it's not always going to bounce off it. It can break right below. Same with this right here. Price came back below the order block over here. So if you were to have a sell entry right here, not that we did, but if you did have an entry here and you would have skipped this because it was at an order block, you would have avoided a good trade because price went right below. So I don't think an order block is necessary to be added to the criteria. It's good to add as a confluence, but it's just a wacky market today. I don't think the order block was the main reason why it bounced up, because it bounced up and it came right back below. It didn't necessarily reverse back up. So for me personally, I don't think it's really necessary to add, but it's definitely something that could have been looked at. Yeah, exactly. So Maddie said news and open price is probably more efficient than order blocks. Yeah, no, I agree. Same here. That's why I prefer to have these sessions up, news price and opening price as well, which was, I think it was farther down though. Like, let's see, 630. Well, it wasn't too far down actually. It was like right here. But there's always going to be different ways to analyze it. Whenever you guys take a loss, I suggest to just take the loss and move on. Being stuck on a loss is just going to keep you, it's going to make you second guess your trades. Like for example, these V3s have been hitting pretty much all day. If we keep looking back at this one V3 here that just happened to not play out as we would have anticipated, it's gonna make you second guess every other trade. So just eat the loss and move on to the next one. I just wanted to cover this to show you guys something that could have been done differently. One other question here was to go over the breakout this morning. So let's go back to a market open here at 6:30. And looking at this right here. So here's, I don't know if I mentioned so here, this is what I'll do. I will put the requirements here for the breakout strategy so that people can kind of have an idea as to where, basically however it's applied. So this is a K2 1 minute breakout strategy. Oh yeah, exactly, Mauricio. So Mauricio said, nothing is 100%, which is completely true. You guys have to take risk. You can never be 100% about a trade. You can be maybe 50-50, 80-20, 90-10. There's always going to be some sort of risk in the market. So, that's the type of game that we're playing here. So, just depending on the situation, obviously you want to have a more bias towards a win rather than a loss, but it's always going to there's always going to be some form of risk in the trade whenever you guys are taking one. So let me just go over the breakout. So first you want to confirm direction of bias, which can be fundamentals, or we'll do retail sentiment, fundamentals, technicals. So you want to confirm the direction of bias. 2, you want to confirm the direction of momentum. Trade in direction of current momentum signal. Second, you want to confirm a strong candle in direction of momentum. And then after that, you can enter on the open of the following candle. One-to-one risk reward for 500 pips. So one confirmation of a strong candle is little to no wick in direction. I'll just put in direction. I think it's pretty self-explanatory. So this is where market open right here. This is going to be the opening candle. Looking at the confirmation here, obviously we can't look back to see where the bias was later in time, but this morning, if you guys rewind or replay the live session from this morning, you guys will see that we had a bearish bias. Reason for that is because retail sentiment was long, so we wanted to trade opposite of everyone else. Fundamentals were short, so we're taking sells. On top of that, the technicals were also for a bearish bias. So we were looking for a sell here. That's going to be confirmation for number one. Confirmation number two, you want to make sure that you're trading the direction of momentum. So for example, here we have a sell signal right here. You're only looking for sells. If you had a buy signal here, then you'll be looking for buys. But at this point, you're looking for sells and it's going in the direction of bias. Third, you want to confirm a strong candle in the direction of momentum. So right here is not a strong candle because this is it's a bullish candle. It's not a red candle. You need basically a red candle with little to no wick on the bottom side. So this right here wouldn't count as the breakout. This right here would count as a breakout. The reason for that is because we have the bias for a sell. We have direction of momentum, which is a sell here as well. The third requirement confirms that a strong candle in the direction of momentum. So right here, we have a red candle and there's little to no wick on the bottom side, right? So it kind of confirms that price is strong towards the downside. So with this right here, you would take this entry on the next candle right there. You would set your TP stop loss to 500 pips. And that's pretty much it. So for the breakout right here, technically I would have taken this if this was on a normal day. However, today was an outlier because it was the first day after a long holiday weekend. And there was all that war talk going on. So that's why I didn't take a trade. But for the people who did take it, it went straight to TP on the next candle. So that's the breakout right there. And let me save this as well so that we can keep this here. And yeah, those are pretty much the requirements for the breakout. So, I mean, if there's any other questions, I mean, it's pretty simple, guys. You're basically just trading in the direction of bias, the direction of momentum. You're looking for a strong candle in that direction after open, which is right here at 6:30. So market open right here at 6:30. It can be the opening candle too. It doesn't have to be the one after it, but basically anything after open. So market open here at 6:30 wasn't a strong red candle. The next candle was a strong red candle. So that would have been the breakout and straight to TP right after open. And that's pretty much the explanation for the breakout right there for this morning. If you guys have any other questions, let me see if there's anything else here. So we have one question here from David. This is it for the breakout. If you guys have any other questions, feel free to put them in the chat and then I will add them to the list of questions for today. Just a reminder, guys, if we don't have any questions, then I'm not going to have anything to cover. So if you guys have any questions whatsoever, feel free to put them in the chat because this session is only going to go on for as long as we have questions. The next question right here from David is, let's see. So David said, hey, Sean, I personally have the bad habit not to use a stop loss. I know it's awful and definitely not a good thing to do. When you begin as a trader, did you have the same behavior, like a little bit risky? Yeah, no, definitely, David. I 100% had the same problem as you. 1 second, guys. I gotta take a picture of my dogs real quick. They just look funny. Sorry, guys. My dogs are sleeping on each other. Anyways, back to David's question right here. He's asking if I ever had the behavior of not setting a stop loss. That's a common bad habit that everyone has, David. It all comes down to trade psychology. If you're brand new to trading, it becomes an addiction to a lot of people. And I'm sure that's how you feel about it too. That's why you don't want to put a stop loss, because you feel like if you don't put a stop loss, price is bound to come back in your direction, right? And that's a bad way of thinking. So the way that I look at trades now versus how I used to was a lot of times, you just want to take a trade and hold on to it until it goes back in a profit. That's a horrible way to trade because sometimes it doesn't come back. Sometimes people do this thing, and I'm sure you guys have seen it before. People always say, buy the dip. But the problem is price continues to dip sometimes and it doesn't come back up. So people will tell you to buy the dip. They're like, oh, price is dipping. Buy the dip, right? So people go and buy the dip, like somewhere right here. And they're like, all right, cool. Price is it's gonna have to come back up, right? So price drops and they're like, all right, we're gonna move my stop loss a little lower. And I'm sure you guys all have this issue at some point. Price continues to drop lower, you drop your stop loss even lower than that. Again, right here, price drops lower and you just keep moving your stop loss lower and lower and lower. And price never comes back up. And it ends up dropping lower and lower. So if you had a stop loss, generally if your stop loss was like somewhere around here, you've gone cut out right here at about 220 pips. If you kept moving your stop loss lower, you would have, instead of just losing one trade, you basically lost two trades. If you dropped it even lower than that, you're basically losing three trades just because, you know, you have that urge to just keep moving your stop loss lower and lower. So my recommendation is, you know, if you're following a proper strategy that that you know works, then just eat the loss. Because generally, if you're taking like one of the strategies that we're applying, like one of the K2 strategies, we have such a high win rate that if you guys do lose a trade, it's usually based off market conditions, because the win rates for our strategy are so high that if you do have a loss, it's usually a sign that the market's just not moving properly. You know, the market is always going to be shifting. It's always going to be adjusting. So the thing is, you have to adapt with the market. So my advice to you is just eat the loss. If that's your problem, you know, you gotta just eat the loss. And if you guys can't do that, what I would recommend to do is, if you ever take a trade, take it and then just step away from your computer. Like, I know there was no entry here, obviously, but let me see if I can find an entry here. So I'll just see if I could find one that happened. The easiest way to get over that hurdle, David, is to just set and forget. That's the main thing that you can do. So let's see if we could find one over here. For example, let's go like earlier in the session where the market was kind of moving. Okay, so here's an example right here. So for something like this is going to be a V3. The best way to, and I know this is not a good entry because there's a sessions right here. I'm just using this as an example. So let me just turn off this so that you guys don't pop up like, hey, you wouldn't take that trade, right? Because yeah, obviously I wouldn't take the trade. But what you can do, David, is if that's an issue for you, just you know, set your trade up and then just leave it alone. As soon as you enter the trade, you set your TP stop loss, just, you know, step away from your computer or just close out your charts, and then just let it run to TP. And, you know, obviously it ran to TP right there. So the more and more you do that, the more and more you'll trust the strategy. And the more and more you start to see that it actually works, the more you'll trust it. So you won't be trading with no stop loss. Because as you can see here, I mean, if you go back in time or just go back as far as you want, like for example here, full TP, I'm trying to see if there's any other entries here that could have been taken. Again, right here, if we go back to this right here, or actually this wouldn't have been an entry because we didn't have a pending sell right there. Okay, here's one right here. So I mean, if that's an issue, you just keep setting, like every time you take a trade, just set and forget it. Like again, right here, another entry. Once you're in the trade, like you get your sell or whatever, you just set your TP stop loss, just close your charts and then let it run. You know, obviously it's going to go sideways sometimes and it's going to pull back. And there you go, full TP again right there. So two trades right there, back to back full TP. And this could be an exercise for you. Like if you have an issue holding the trades, just set and forget them. You can see that the win rate here is pretty high. So again, right here, another trade. Actually, there's not one there because we already have a sell. This is going to be one right here, actually. Again, right here, same thing, right? Set the trade and then just let it do what it needs to do. And then if you run into a loss, because, you know, if you just back test it, you'll see that there's a lot of wins here. So if there's a lot of wins, you can start to trust the strategy because you know that it actually works. If there's ever a loss, like how we had earlier today, that's why for me, when we had the loss here, I was like, okay, I just accepted the loss because I figured the market was just moving weird. So like right here, we took this trade this morning. And losses are going to happen. This is something that you guys just have to understand. Losses are always going to happen. It doesn't matter how good the strategy is, how good the trader is. You're going to run into losses every once in a while. I know I rarely lose, but when I do lose, I usually just call it a day. Or I take like one trade to recoup my losses, and if it doesn't hit, then that's pretty much it. So for example, right here, if you just said forget it, obviously this would have lost the trade, but it would have prevented you from revenge trading, right? Because what happens is people are revenge trading, you end up losing more than you should have. For this right here, I lost about 2%. You guys can see my loss here from today. lost about 2%. There was some slippage. So I was supposed to lose 5,000, but I lost 5,800, which is fine to happen sometimes. This is why you guys want to have it within a set parameter. This account here is a 200K account. So let's see, 200K, or I lost 5,830 divided by 200,000. So it was about 2% risk. It went a bit higher, closer to 3, because obviously there was some slippage there. But normally, if I was only risking 5,000, it would be 0.25% risk. So I try to keep it around that parameter so I don't ever get anywhere close to my daily loss. Obviously, if you use proper risk, that's fine, because on the next trade, like say for example here, we lose this trade, and I was like, all right, whatever, just let it lose, and then I move on to the next one, which I mean eventually happened down here. Let's see, it was right here actually. So this is why I always recommend that if like never chase the trade. Like even though you would have chased the trade here and you would have probably won the trade, it doesn't always play out that way. If you would have just ate this loss here and risked 2.5%, if you waited for the next one right here and you risk the same amount, because there's another entry right here. I know the stop loss TP is different, but in this case, you would just increase your lot size to match your risk. So this is 0.25%. This would be, if you were to take another 0.25% TP, because this is 101, and this hit TP, then you would have been back in business, right? You would have been back to break even. So say you lost this trade, you won this trade here, you move on to the next one. There's no entry there because there's no pending sell. There's no entry there. Oh, again, there's an entry right here actually. So say for example, if you kept trading, usually I stop trading at 8, but if you kept trading all throughout the day, you could have taken this one again right here for another 2%. And then if you took this trade here, another full TP, right? So this is why it's important that you guys just eat the loss sometimes. If you just eat the loss here and then just let the market run for a bit, about 30 minutes to an hour, you would have entered another trade here, would have won, took the next trade here, and this would have won as well. So instead of having one loss, and if I kept trading, you would have gone back to break even right here. And then on this one right here, you would have been in profit 2%. So that's why it's really important that you guys don't over trade and don't revenge trade, because that's a problem that a lot of people have. Sometimes you just have to understand the market's not going to give you what you need at all times. I know sometimes you guys get on a high streak or a hot streak where you guys just have a bunch of wins and you guys just want to keep revenge trading. But if you guys are just patient and waited for the next entry here, you would have made it right back. So that's another thing that a lot of people don't. It's hard for people to overcome that. I think the biggest things that people run into would be like what you said, David, no stop loss. That's going to go hand in hand with improper risk management, because when you start to increase your stop loss from where you planned, you start to take on more risk. So improper risk management, no stop loss, revenge trading, and over trading. Those are like some of the main reasons why people are not successful at trading. You just have to be patient sometimes and wait for the next entry here. So yeah, no, I had the same issue with you when I started trading. I think everyone has at some point. But once you get over that problem, or you start to figure out what your issues are with trading, that's how you can make the real breakthrough with your progress. Let's see, other than that, let's see if there's anything else here. Talanji's asking if we got a V3 sell with an invalid buy momentum signal on the second candle. No, it wouldn't. So if you have any signal on the entry candle, there's no entry. So you can't have any signal on the entry candle, Talanji. So say for example here, so if there was a momentum signal on this candle here where you're going to make your entry, even if it's invalid or valid, no entry. Same with here. Like for example, this is the entry candle. If there was a valid or invalid signal there, no entry either. So there can't be any signal on the entry candle, whether it be valid or invalid. Yeah, no problem, Talanji. Going up, let's see. So Mauricio is asking, what are the minimum must-haves for the V3? So the minimum the bare minimum would be the requirements, obviously. And the new requirement that we're adding to it is going to be a bias. So let me just add that to here as well. Variation 3. We'll add that to the let's see. We'll add it to here. Confirm trading in direction of bias. Retail sentiment, fundamentals, fundamentals, and technicals. All right. So let me just update this real quick. And when I'm gonna remake these videos at some point, guys. I'm not gonna make it right now, obviously, because we're still working on these. But when I do remake the videos, I will create videos for basically the best way to apply it, and I'll give you different variations to apply the strategy where it'll be a bit riskier, but they still work perfectly fine. Like basically, we could just remove like a couple of these requirements here, like requirement 5 and requirement 4. These are just extra requirements that we added over time to increase our possibility of winning. Technically, you can apply the strategy without requirements 4 and 5 because they still hit almost like every time. Like you've seen over here, there's a lot of entries that you could have taken. Like for example, I'm trying to find one like this one right here. So this one right here, there's no pending signal, and you could have taken that as well. Yeah, I mean, if you really wanted to. So as you can see right there, that would have been a full TP right there. And there's a lot of entries here that you could have taken, you know, just depending on how risky you want it to be. But for the most part, let me just save this real quick. So it's called K2 5-minute variation V3. K2. All right, so going back to your question right here, Mauricio, these are going to be the very bare basic requirements that you need for the V3. You need to identify the high-low. You need to look for, I mean, obviously, you know what the requirements are. On top of those requirements, the last one that we've added was to confirm trading in the direction of bias. So in order to confirm the direction of bias, you want to look at retail sentiment. Like for example, right here, retail sentiment is currently 62% long. So this means that there's 62% of retail traders on the long side. Basically, you want to trade the opposite. So if there's a lot of traders on the long side, you want to sell. So our bias for retail sentiment is going to be for a sell. Looking over at fundamentals over here, you want to trade in the direction of fundamentals. So refreshing this right here. Current fundamentals for the futures are down 412 points. So with that said, you want to be taking sells. This right here is in confluence with this right here, which is the retail sentiment. So if this is telling you to take sells, this is telling you to take sells, you probably want to take sells. The last confirmation you could add on to it would be the technical analysis, right? So you want to make sure that the technicals here are confirming. You don't have to confirm all of them. I think 2 is fine. 2 of the main ones you want to confirm are always going to be retail sentiment and fundamentals. Technicals are going to be your weakest bias. But if they all line up, then you know it's pretty much a home run hit from there. So if you have all of those lined up, then that would qualify as like almost a perfect trade. Another perfect trade would be if a variation lines up with another variation, like a variation 2 or a variation 1. So obviously, you know, the more confluences you have, the better. For the most part, you probably want to have just retail sentiment and fundamentals, because the thing with the technicals is that it's not always going to move in that direction, right? So like, for example, right here, price was pushing up, but the thing is there was a sell entry right here, right? And if you were to apply the technical bias here, if you were to say, oh, there's no technical bias, you're not going to take a trade, you would have missed out on a perfectly good trade right here, right? Because this went straight to TP with no drawdown. So, you know, it's just really up to you, up to your preference. For me, I like to be very conservative, so I probably want to check to make sure everything lines up here, because the thing is I would have missed this trade here, but that's fine because I would have just waited for it to come down right here and I still would have had my win right here. So not really a big difference. I mean, it's Obviously, you're going to miss out on a few trades here and there, but it just really depends on how confident you want to be about the trade. You know, if you don't feel very confident, then maybe skip that one and wait for all the biases to line up. But if not, you know, you can take something riskier here. Obviously, you know, you have a good chance of it hitting because most of your biases hit or are met. It's just you don't have all of them lined up. So the minimum would be pretty much these requirements right here, ratio. And then if you want to add technicals to have it like 100%, I mean, it's never going to be 100%, but if you want it to be like 99% or something like that, then you could wait, because obviously right here, this was a good trade as well. And this one down here as well. There's 2 trades that would have hit, 3 trades actually, one right here too. So it's just up to preference, but for the most part, these are going to be the minimum requirements for the V3. All right, let me scroll down a little bit. So let's see, Talanji's asking, or he said, there was a 3-minute V3 buy that printed 10 minutes before that V1 sell. Bet you guys lost today. The 3-minute went exactly to TP, then dropped. Usually the 1 minute takes priority, but the 3-minute won today. Yeah, no, it happens sometimes. So that's one thing that I was talking to with a lot of a lot of members today, or I wouldn't say members, but like people who I like go over the strategies with, like Maddie and stuff. We did go over that. There were a lot of opposite entries today. You know, like this morning, I did warn everybody that today was going to be a bit of an iffy day because it was an outlier, right? We're coming back from a long holiday weekend. So we're basically a day behind in the market. Also, with a lot of the war talk going on, you're going to see a lot of weird spikes. So as you can see from today, you know, just marking up 6:30 up until 8, you guys can see how messy the market was. There was no clear direction at all. So if I turn all this stuff off, and I'll delete this too, you guys can see that there was no clear direction in the market today. So initially market dropped like where we anticipated, then it came back up, then it kind of went down, then it came back up, and then it finally came down to where it was supposed to go. Because we were expecting price to drop today, right? Because of the war talk and stuff like that. But there was no clear movement today at all. So this was kind of expected. This is why I didn't want to jump into the breakout earlier this morning, even though it would have been a full TP right there, a nice push for 500 pips. This would have been a 5,000 profit for me. So if I took this trade here and I took the loss today, that would have softened up that loss. And then if I took this other V3 right here, I would have had another win. So Talanji, this is actually the sell that we looked at before it went offline. If you remembered at the end, I said, oh, I'm probably not going to take this trade because it's right at the sessions. However, it was right at, it was also at liquidity. So at the end, I don't know if it's on here, but we were looking at it and I was telling Talanji, like, oh, I'm probably not going to take this trade because it was like right at the sessions or something. I think it was like this one right here. Yeah, it was this one exactly. So it was this one right here. Talanji was like, hey, Sean, there's a V3 coming up. And I was like, oh yeah, I'm probably not going to take it because it was right at the sessions. But I ended up taking it because it was right at liquidity too. So there's liquidity that was right here. TP stop loss was like right there. And I was like, well, I'm probably not going to take it because it's so close to the sessions right here. And it was after 8. But I saw that there was liquidity right here. So what I did was I just took it for like the last push. It was like 340 pips, but I caught it at the very end. So as price came up right here, I entered as price dropped back below right there. That's actually where I entered when it dropped. And then I just caught it until it finished right there to TP. And that's the trade that I took right here, where I made that profit, because I just caught like the last bit of it. There was some slippage, so it filled my order kind of late. I put my enter tree like somewhere around here, but it actually entered down here. I don't know if it was because of spread or slippage, but it did enter me very late, and I only caught like 120 pips of it. So I caught like this much of it. right there. So that's how much of the move that I caught. I was trying to catch it up here, but the price was just moving too fast and it just closed me in right there, or it pulled me in right there. And that's how I locked in profit off that one trade. So there's like other confluences you guys can use. You know, even though it's kind of risky that it's at the sessions, you could also use liquidity here as a confirmation to re-enter a trade or to enter a trade late if that becomes the case. Even though I do recommend not to FOMO into a trade, the liquidity usually does play out. So that is the trade that I took there. Nice, yeah. Solange said, yeah, I caught it. I need a master liquidity thing. Wow, didn't even notice that. Yeah, and that's the reason why I got into here. So what happened here was price did hit liquidity, and then sometimes I leave it up because if it pulls back, so for example, right here, this is when I do decide to re-enter a trade, like, or not re-enter trade, but enter a trade late. So for example, here, price hit liquidity, it reversed a little bit. But if this happens, so this is one thing that you guys want to look out for. When price hits liquidity but doesn't break below it, if it comes back down for another retest, like this right here, right? It's retesting this area of liquidity right here. This is a pattern that you guys want to keep an eye out for. When this happens, usually it spikes right below it. A lot of times it spikes right below it. So for example, right here, it came around and then it spiked right there, right below it. And that's where I made my entry from. So, you know, just something to keep in mind. If you guys watch the live sessions, I do cover this almost every time. And another question too that we had earlier was about these liquidity zones. If you guys remembered, I was telling you guys to look out for this liquidity here. So I mentioned that that price was probably going to swing back up at some point, right? Because it would have to hit liquidity at some point. So if you guys had these liquidity zones marked up right here, not really zones, but just areas. I think you guys can see that it came all the way back up and triggered almost everything. So, right, price kept dropping lower. So look how price hit liquidity right here, hit liquidity, pushed up higher. So here's a retest that I was just talking about earlier. I know it's kind of messy, but sometimes if you just leave liquidity up there. So for example, here price hit liquidity, it came back down. And then as it comes back up and hits liquidity again right here, it pushes up pretty high. So again, right there, you see how it pushes up right there and then hits it. So this is where, like, if you want to catch a little move, it's a nice little 100 pips right there. If you catch it as it hits liquidity again. But back to what I was saying earlier. So I forgot who asked me. I think Gene Vaughn. I don't know if you're in here right now, Gene Vaughn or JB. I don't know if you're in here right now, but yeah, he was asking me like around like 9 o'clock. He was like, "Hey, Sean, prices dropped so low. Do you think there's going to be a reversal?" I was like, probably, because there's a lot of liquidity sitting right here. So if you guys waited for the mid-market reversal, and it doesn't have to be in one direction. Basically, you just want to wait to see where price is currently at when it gets closer to 10. And you know, to keep in mind, this doesn't always happen. It happens very often. It's not 100%, but it does happen very, very often. All right, Jennifer, we'll see you tomorrow. So the mid-market reversal tends to happen somewhere between 9, 10, like somewhere around this period, or like 9, 10, 11. Usually where the mid-market reversal happens. So if you look right here, it hit about 9. And when it hit 9 right here, you can kind of see where liquidity is sitting, right? There's some liquidity below here, but the real liquidity is sitting above here because price hasn't pushed up yet. So if you guys were following this, and I know Biden was speaking, so a lot of people weren't thinking about trading, especially not for a buy. But if you were just following the liquidity here, and you let this run a little bit, so this liquidity over here didn't get hit, or that liquidity got erased. Price came a little lower right here. So as you can see, it hit liquidity. This is the same pattern that I was just referring to earlier. So remember earlier, guys, I mentioned when price hits liquidity like this, if it comes back down, so if it comes down and it doesn't break through it, retraces, when it comes down a second time right here, it usually breaks right through it and just triggers the rest of the liquidity right here. And then when that happens, one of two things will happen. It'll either bounce back up or it'll keep pushing down lower. So right here, price hit all the liquidity below, hit the low right there. And here he goes, price comes back up, right? As price comes back up, you can see that there's a ton of liquidity just sitting right here on the top side, right? This liquidity is pretty much done with. It's been triggered. Now we got all this liquidity sitting above here. Right there, price breaks right through it. And this is what I was just referring to earlier, right? So price hits liquidity, comes up, comes down for a retest, and then it breaks right through it. But the thing I'm trying to get across to you guys is the mid-market reversal, because I get this question a lot. People are always asking, do you think price is going to reverse? And yeah, of course, I do think it's going to reverse once it's closer to 10-ish. So again, right here, I'm going to keep drawing this liquidity. And just a reminder, you guys can see all liquidity here hasn't been hit yet, right? There's liquidity right here, right here, right here, all the way up to right here. And as price drops below. So again, right here, another liquidity. This is something to keep in mind. So now it's 10 o'clock, right? This is exactly what you guys are looking for. This is where the mid-market reversal tends to happen. From 10 to 12. Price has been dropping low. And where you would be expecting price to go from here is to go back up, right? Because there's so much liquidity here that's just sitting and nothing here has been hit. So here we go, price drops lower. And if you guys are patient enough, like if you're really patient, just waiting for price to finally reverse, there goes, price hits the liquidity right there. But you guys don't want to jump the gun. So like, for example, here, if you guys remember, there's like liquidity areas, but the areas that you're really looking for is when there's double lines. So like this right here, when it's out on its own, not very useful. Sorry guys, spammer. So this is what you're looking for, like something like this. When it's out on its own like this, it's not very strong because it's just one level, right? When you have them right next to each other like this is what you're really looking for, where they're double liquidity areas right next to each other. Let me turn off the sessions. I just want to clean up the chart a little bit. Okay. So like this right here, double lines up here. Even this right here would count. This right here is too wide, so I wouldn't count this as like double lines. These are double lines. Right here, not so much. This is double line right here. So now watch this price comes on its way up. So it's still dropping. Drops lower. This is when Biden was speaking. So obviously price is dropping. I think Biden spoke around like 10. So as soon as he got on the mic, price started dropping and then price started coming back up. So more liquidity right there. And there you go when the price starts pushing up, right? So price starts pushing up right here. This is like the area to look out for. Okay, so remember how I was talking about the whole double line thing? There's another double line right there. It's tool right here. So check this out. When price finally came back up and touched this area, huge spike right there, right? Because it hit liquidity, came back down. And then this is where the push-up started happening. All right, so remember right here, I drew the double line. Because price comes back up. There you go. So see how price kind of messes around down here? It doesn't really do anything, right? Because these like single liquidity lines they're not as strong. But when price hits this double line area right here that I was just referring to, this is where you start to see the real movement. So price hits the double line right there, it spikes all the way up. Look when price hits this double line right here and this double line right here. Price comes up, hits the double line, hits some liquidity, and then it comes back up. So like I was saying before, it'll come back and retest. So like sometimes it'll drop and then sometimes it'll come back and retest. but this is when the market was moving kind of crazy. I think it got close to like, oh, sorry. So this right here was when market was coming close to closing. So the mid-market reversal tends to happen from like 10 to 12, sometime in between 10 and 12, and then it starts to die down. So I was going a little too far off right here, but this is pretty much where the mid-market reversal happened. From 10 right here, price was still dropping because Biden was speaking, and then it came back later around 11. So around 11, price hit liquidity, came up, and then usually after 12, I'm like done trading, like I'm done, because you don't want to be holding stuff until it gets close to the, you don't want to be holding stuff as it gets close to market close over here, because then volatility just dies down like super heavily. So liquidity didn't hit all the way to the top, and we weren't expecting that because we were looking for a sell anyways. But you could have hit liquidity in both directions. Like you could have hit liquidity to the top side, and then if this wasn't 12 o'clock already, you could have rode it back down. Because if you go back over here, so as you guys can see, hit liquidity above here, and say that it wasn't 12 o'clock yet, and then you had let's see, liquidity drawn over here. So one thing that you guys want to also keep in mind is time, right? Don't forget about time, because market moves in different patterns all throughout the different times of the day. Like for example, we trade from like 6:30 to 8 because volatility is super high, from 6:30 to 8, from 8 to 10, and I'll just draw it right here so you guys can see. All right, 6:30 to 8 is our live, right? This is when I'm live. This is where volatility is pretty high. You can see price moved about, it moved about 3,000 pips during that time period. From 8 to 9, price tends to consolidate a bit, right? And you can see here, it's pretty clear. 8 to 9, consolidation. This is why I go offline. I don't trade anymore during this period. 9 and 10. Price was dropping a bit, but it wasn't really moving too much, right? There was some consolidation. Then it was like a slow drop right here. 10 to 12, this is where volatility starts to pick up a bit again. And this is basically where the mid-market reversal happens. After 12, I'm done trading. Like I don't even think about taking any trades after this because market starts to move kind of weird. But yeah, as you can see here, this is kind of how the pattern works, right? 6:30 to 8, our live session right here. We take a couple scalps, we call it a day. Consolidation, consolidation. Sometimes I'll come back from 10 to 12 to take one more trade as the mid-market reversal happened. So you can see right here, price was kind of moving down when Biden was speaking. When Biden was done speaking around 11, mid-market reversal to the upside. So something to to keep in mind. And just a reminder, when I do have the new videos created, I'll make sure to have all this stuff included. I know I don't have it included in the current course because this stuff is like, I never really plan on teaching people this stuff because this is stuff that I just knew in my head. But now that we've been trading live every day, it's easier for me to explain it to you guys because you guys see me do the same thing every day. Like a lot of the stuff I would just do on my own and not really think about it. It would just happen because I know how the market moves. But now that we've been trading like this, every day for like the past, I think 2 or 3 years now, I can incorporate it into the course since we just have a certain time period where we trade. So yeah, let's see if there's anything else here that I'm looking at. Let's see, scroll up real quick. Yeah, no problem, David. I'll see you tomorrow too. Let me scroll up, guys. So I kind of went off on a tangent there trying to explain all this other stuff. Let me see if I missed any questions here. So let me scroll up real quick. Question from Mauricio was a V3 trend meter needs to be in direction of the trade, momentum opposite direction. So let's see, Mauricio, for your question there, the trend meter, so going back to the requirements that I posted earlier, that's going to fall under requirement number 5 right here when you confirm the direction of the bias. So retail sentiment and fundamentals are going to be most important. Technicals is where the trend meter is going to fall under. It's not required, but like I mentioned earlier, it's going to be a better confirmation. So you can use a trend meter or you can use the pivots or you can use both, just depending on how confident you want to be with your confluence. Is obviously the more confluence is the better. but you don't want to add too much, because if you add too much, you're never going to have any trades. So you could use a trend meter, but it's not absolutely necessary for every trade. But personally, yeah, I would personally use it, either the pivots or the trend meter. So if you guys are not familiar with like how the pivots work, when price is below, price is trending down. When the trend meter is red, price is trending down as well. So if you use two different confluences for the trend, it'll give you a better confirmation that price is likely to continue trending down. So as you can see right here, price is below the pivots, trend meter is red, super strong trend to the downside, right? Again, right here, price is above the pivots, trend meter is green, strong confirmation of a bullish push right there. So personally, I would probably use both, but I wouldn't say it's like a requirement. It would just be an extra confluence. Your second question here with the momentum opposite. Yeah, so that falls under the fourth requirement right here. You don't need an opposite momentum, but you just need something that's pending in that direction. So that's going to be one of the actual requirements for the V3. All right, so let's see. Done with that question there. Let's see. Let me scroll down real quick. Yeah, so Maddie said maybe when trading with the trend, you don't need a pending momentum. So yeah, that's like one other thing that you can do too. So I'm going to take all of this input into consideration. So when I do create the videos for the V3, this is why I'm taking time to create the V3 videos, because there's so many different ways to apply it. Like Maddie said, basically, if you're trading in the direction of momentum, you might not even need the pending momentum. Like for example, right here, the trend down is so strong, right? The trend down is super strong right here. So for example, no, that'd be a valid entry. Looking for one where, so one right here. Okay, this is one example right here. So looking at the requirements here for the V3, and not saying that this is a change in the strategy, but there's going to be different ways to apply it. Obviously, you want to have as many confluences as possible. Like for example, right here, this trade over here would have all of the requirements, plus it'd be trading in the direction of the trend. So for this entry over here, this would fit all the requirements, plus the trend here is super strong for a sell. So if you were to take this, I'd probably go full lot size and be absolutely positive that this is going to hit, right? So if I was to take this trade here, I wouldn't even worry. I would just take the trade, let it run, let it hit TP. There you go. For this next one over here, which one was it? This one right here. This one over here, this wouldn't fit all the requirements, but like as Maddie said, sometimes, or maybe, in some instances, you don't need to have the fourth requirement here, because you can just trade in the direction of the trend. Price is so strong in a downtrend right here that if you were to take this and you kind of skip the fourth requirement and then you let it run, full TP off that too. So there's a ton of different ways to apply the strategy, guys. It's just, I would recommend to use as many confluences as possible. Sometimes people take shortcuts and it works perfectly fine. But in the future, I'll create videos where I'll kind of explain the differences. But I think the best way to do it is to use all requirements and then use the trend as a final confirmation to be like absolutely sure it's going to hit. Yeah, no problem, Mauricio. See you in the morning. All right, so that's it with Mauricio's question. Next question over here is from, let's see, from Henry. Henry said, sorry, Sean, joined late. Can you go over lot number and TP stop loss for 100K count with a different version? So Henry, we talked about this during the live. There's no set TP stop loss for the version 3. So I think you would need to understand how the strategy works first, Henry, because I don't think you're going to understand how to set your because your TP is never going to be the same for the V3. For the V1 and the V2, it's going to be the same because it's a set TP stop loss. So let me see if I can find a V1 here. All right, here, let me just put the because the thing with setting your TP stop loss, Henry, is that you need to actually understand what risk is, right? You're not going to have a set number every time. Depending on like what your trade is or how much you're going for, it's going to change. So I think you need to actually understand like how risk management works versus having a set TP stop loss, because it's not always going to be the same. So if you have a 100K account, right, we're going to use this as an example. Your daily loss limit is 5%, which is 5,000, right? Max loss limit is 10%, which is 10,000, right? So these are the numbers you have to work with. So for each trade, you basically want to use per trade risk only 2% or less, right? What's 2% of 100K? 2% of 100K is 2,000. So per trade, you want to risk max of 2,000. And the reason for this is because in case you run into slippage, you might lose a little more than 2,000, which is fine because you're still going to be below the daily loss. So if you want to take this trade here, say for example, you're taking a version 1, right? Your stop loss is going to be version 1. It's going to be 300 to 1, right? Version 2, it's going to be 300 to 1 or 3 to 1. Version 3, it's going to be 1 to 1. So do you see the difference here? For the version 2 and version 1, it's going to be the same, but for the version 3, it's always going to be different. So you have to actually understand like what your risk is, because your stop loss can be 300 pips, it can be 500 pips, it can be 1,000 pips in some instances. It just really depends on like what you're setting it to. So if you're trading this here, so you have a 300 pip stop loss, and you're using, I'm trying to think of the number here, using a 5 lot. So if you're using a 300 pip stop loss and you're using a 5 lot, your risk for this trade here is going to be 1,500, right? Which is going to be below your 2,000 max risk per trade. So you can use even more than that. You can probably use like a 6 slot. So 300 times 6, that's 1,800. You can probably use, I don't think you can use a 7 lot, maybe a 6.5. It's kind of pushing it. 7 lots going to be too high, I believe. Yeah, 7 lots too high. So you can probably use a 6.5 or below. So if you want to do a V1, you can use a 6.5 lot size or below. Always, that's what you can use. And this is kind of pushing it. You probably just want to use a 6. So I would probably just say 6, because I don't want to confuse you by using decimals. The V3 varies because your stop loss can be different. It can be 300 pips, it can be 500 pips, it can be 600 pips, it can vary from there. So exactly, yeah. So Talanji said 5 lot means you can lose 3 times in a row and survive, but if you're confident, then you can increase. Exactly, right? We rarely lose. So that's why I use a full lot size with most of my trades. Because I'm not expecting to lose, right? The reason why a lot of people are scared to use what I would say are proper lot sizes is that they're scared to lose because they're used to losing trades, right? They don't have a high win rate. Like the strategies that they apply don't usually win very often. So that's why people use such small lot sizes. For us, we win almost every time. So that's why we're okay with using a decent lot size when trading. So this is a very basic breakdown as to like what you should be using. Henry, like if you're not confident with your trades, don't use a 6 lot, okay? 6 lot is what you should be using when you're fully confident. If you're not fully confident, use something smaller than this. But the V3 is going to vary. If your stop loss is more than 300 pips, then you're going to go smaller in lot size. If your stop loss is less, which it shouldn't be because 300 is like the minimum, you can go higher. But odds are you're not going to be using anything less than 300 because you need enough to cover the spread. So hopefully that makes sense, Henry. Does this make sense for this? I just want to make sure you're getting it because I don't want you to get confused with like the different entries here. Okay, perfect, Henry. Yeah, so yeah, it's hard to explain the V3 because the stop loss can vary from trade to trade, but you definitely want to use, you probably want to even go down to a 5. So say for example here, just like what Talanji said, right? If you're using a 5 lot, you can lose 5,000 in a day. You divide that by 1,500, you can lose 3.3 trades. But this is probably not going to happen because we don't lose, like I don't think we've ever lost 2 trades back to back. So if this, if you use a 5 lot, you should be perfectly fine to cover slippage and to cover, whatever may happen. But if you feel confident, then use a 6. So I'd play around with it, see how confident you feel with these lot sizes. If they're just too much for you and you just don't feel confident, then just lower your lot size. One thing to keep in mind, guys, is that you don't have to rush your account, right? So a thing that I want to keep reminding you guys is, so here, let's see. If you're doing, sorry, I forgot what the 6 times 300. So if you're doing 1,800 pips, or if you're making 1,800 per trade, or you're doing 1,500, right? So let's just do this real quick. So you're making 1,500 per trade. So you have to make a profit goal of 10,000, right? 1,500 divided by 10,000. Sorry, I did that backwards. 10,000 divided by 1,500. You only have to win 6.6 trades, guys. So if you take one good trade, like if you basically only take what we take here on the live every single day, because the thing is we don't lose very many trades on the live. If you can at least catch 6.6 wins, which is basically 1 trade a day, if not 2 trades a day, you'll pass your FTMO no problem. Like, where's Steven at? Steven's not even here. But Steven passed 2 FTMOs, guys. And you guys know Steven in the group. Like, Steven has been struggling with passing his FTMO because he keeps trading on his own. What he started doing was he started just trading on his own. Well, he started just trading. Where's my job, Steven? Let me see if I can chat with Steven over here. So what Steven changed is he stopped trading on his own and he just started trading with what we've been doing here on the live. Where's Steven at? I swear I was just talking to him. Yeah, so Steven has literally just been taking the trades that we take here on the live. And look, he's doing so well. He's like on his second FTMO right here. He makes like 1,200 a day and he's happy with it. He's passed like every day he's in the green because what he did was he stopped taking his own trades, right? He just takes what I take here on the live and he's passing his FTMOs. So guys, like if Steven can pass his FTMOs just taking what I take here on the live, then you guys should have no problem. I feel like the main reason, yeah, Valentine said, Steven used to kill us, man. Good laugh. Yeah, no, Steven, or not just Steven, but like a lot of people in the group, what happens is a lot of people will make profit with me during the live and then they go ahead and trade on their own during Asia or London and they lose all the profit. If you guys have problems passing FTMO, then just stick to the live. All you need to do is stick to the live, pass your FTMO, and then you guys can do whatever you want from there. But what I'd recommend is to just stick to what we've been like, stick to whatever gets you guys to where you guys need to be. Obviously you guys can trade on your own, but what I would recommend is take normal lot sizes during the live. And then when you trade on your own, use a very small lot size to build your confidence and to build your ability to identify trades on your own. Because I think that's the main problem with most people. If it's like you guys will get so close to passing your FTMO or MFF, and then you decide to trade on your own during Asia, where I usually recommend not to trade. And then you just like people just end up blowing it all. So that's probably going to be the best option if you guys have issues with passing your challenges and verifications. Other than that, let me scroll up real quick and see what else I'm missing. Okay, Okay, let me see what else I'm missing here. Yeah, man, I agree with the 3-minute buy running earlier. Let's see. All right, so from Jason here. Jason said, Sean, bro, I'm ready to learn everything now. I drive semi-truck, so I don't have a lot of time, but I'm ready now. Just ordered my desktop computer too. My iPhone sucks sometimes. And I'm surprised, Jason, you've been killing it like on your phone. So Jason over here is a truck driver, and it's crazy because he's passed, like, I think you have like 3 funded accounts now, right? Or 4, and he just trades on his phone. It's pretty remarkable how good Jason's been doing. He's been posting his profits in the group, not necessarily privately, but man, it's crazy. Yeah, Jason has 3 funded accounts. That's crazy. Trading on your phone too. I can never do that. I get stressed out on my phone because I can't adjust my TP stop losses quickly. So a question from Jason here is asking, can you give me an example of a V3? And what's the best strategy to use on the 1 minute, 5 minute? I think overall the V3 would be the best on the 1 minute and the 5 minute. I think it's the best overall because I think the best part about it is the fact that it's a 1-to-1. A lot of the other strategies use negative risk reward, which is okay because we do have a high win rate. The problem with those strategies, though, are that a lot of people get very greedy because they think everything's going to win, which, I mean, it wins most of the time. But when you do suffer a loss, it does set you back. And then if you start revenge trading, you go into a super deep hole. But the V3 is like, if you lose one, the next trade will bounce you right back. So what I'd recommend is to use a V3. I'll show you an example here on the 1 minute. So let's see. Or I've went over a couple examples. I don't know if you want me to go over something different, but I'll just show you, I guess, like same one that I went over earlier, because there's not really many options here from today. I've already went over all the V3s from today, but let me just show you here on the 1 minute. So again, right here on the V3, you want to identify the high low using the high low indicator. So right here, you have the high. And then you have low. The low is not going to matter because you're looking for the high, because you're basically looking for a sell here. Since price is below the pivots, bias is for a sell. So in this situation right here, you're going to be looking for a sell. And when you're looking for a sell on that high, you want to see a green candle. So right here, we have a high. This high is a green candle that satisfies requirements 1 through 3. Next, you want to confirm that there's a pending momentum in that direction. That means that there's no sell signal currently running because you're looking for a sell. You're looking for a buy here, but you want a pending sell. So right here is a pending sell because the most recent signal was a buy. The 5th requirement is to confirm the direction of bias. You can't really check now because time's already passed. But if you just look at like this is not going to fit because this is current time. Basically, you're looking for retail sentiment to be long. You're looking for fundamentals here to be red. It's not going to be red now because this is a new day. And you're also looking for technicals here to identify a sell. So price is below the pivots, trend meter is red. That's going to indicate that technicals are directing a sell. So with that said, all the requirements here are met. You'd enter this for a short position right there. Put your stop loss at the high, which would be right here. You can put it slightly above, like that. And then that's pretty much it. When you take the trade, you let it run. And there you go, full TP. So this is how it would work on the 1 minute. It's the same thing on the 5 minute. Let me go over here to the 5. See if I can find an entry here for you. Yeah, it's super simple, Jason. I mean, the requirements seem like there's a lot to look at, but it's really simple because a lot of the requirements line up with each other. They're not that difficult. It's a lot easier once you actually apply it versus looking at the requirements. At some point, you're not even going to look at the requirements. You're just going to see entries and you're just going to hop in without even thinking. Same strategy for the 5. It's the same thing. It's just on a different time frame. So see if I can find one over here for you. There weren't very many this morning because of the obviously, the crazy spikes in price. But let me see if I could find one over here. This would have technically been one, but there's no pending sell. So nothing off that. Okay, here's one right here. Actually, no. It's harder on the 5 because there's no pending sell. A lot of these already have a sell. So there's a sell signal right here. Even though there's a lot of sell entries right here, we wouldn't have well, technically, if you were using the requirements, you wouldn't take it because there's no pending entry or no pending signal in that direction. Let's see. Okay, so I think there's one like right here. Yeah, it's right there. Or no, sorry, it's not. Actually, no, there is one right there. Okay, so here's the same thing for, yeah, exactly. It's the same thing for buy. That's exactly what I was going to show you right here, Jason. So same thing again right here. Earlier, I showed you a sell. This is now going to be for a buy. You can't confirm the confirmations right now because this is like in the past. But again, right here, you're going to identify the highs and the lows. So we have a low right here, and we have a high right here. For this situation over here, you're looking for buys because the bias is for a buy, right? Price is above the pivots. The trend meter here is green. So we're going to predict that price is going to continue pushing up. So to look for a buy, you're going to look for a low. So there's a low right here, and you want it to be with a red candle. There's a low with a red candle. That's going to be requirement number 1 or requirement number 2. We've already identified the low here. So that's requirement 1, requirement 2. Now, requirement 3, you want to confirm that the following candle is opposite. So we have a low here with the red candle. Next to it is a green candle, right? That's going to be requirement number 3. 4th requirement, you want to confirm that there's a pending momentum in that direction. Right here, we have a sell signal. So what we're looking for is a pending opposite. If there's a sell signal here, the next signal is going to be a buy. So with that said, we do have the pending one here for number 4. The last requirement is to confirm the direction of bias. We can't really confirm it here because this is back in time, but we're just going to use an example that retail sentiment was short. So we're looking for buys here. Fundamentals were technically bullish. So we're going to be looking for a buy there. And technicals here, as we confirmed earlier, trend meter is green, price is above the pivots. It's going to be a buy. So with that said, we enter a trade here. Same thing that we did on the 1 minute, but on the 5 minute, stop loss is going to be right there, right below, about 50 pips or 500 pips actually. Sorry. Let me go back. 500 pips. And with that said, that's pretty much it. You have everything set up, you let it run, and you let it, sometimes it's not going to go right away. It's going to take some time. Obviously, this is the 5 minutes, so it's obviously going to take more time. And this is during Asia session. So just keep in mind that this trade came out during Asia session. So it's a lot slower than New York. But eventually it does hit TP right there. So, I mean, it took a lot longer than the 1 minute because it was during off session. But you can see that it does work in other sessions. It doesn't only work during New York. It's just New York's probably the best time to use it because volatility is a lot higher. So there's an example of it on the 5 minute, Jason. Pretty simple. As I mentioned earlier, it's a little difficult with me showing you on the screen, but once you actually practice and backtest it, it's going to make a lot more sense because you're gonna feel a lot more confident identifying the entries and then mapping them out just like I did here, and then watching them hit TP because they're not really. I mean, this strategy is super simple. There's a lot of requirements, but the only reason we have so many requirements is so that you guys fully understand it. Yeah, exactly. I don't know how you even do it on your phone, Jason. I'm impressed that you can do it on your phone. Once you get your computer, I think it'd make it a lot easier for you. Yeah, definitely. Because you'll have a full screen in front of you and you can actually go and back test and, do all that stuff behind the scenes. All right. Yeah, no problem with that. Let me see. I think you had another question down here too. Oh, yes. You're asking about your lot size. So yeah, since you're on a 50K account, Jason, you're just going to use half lot size. So earlier I was telling Henry to use a 6 or 5 lot. You just use half of that. So you use like a 2.5 or a 2 lot, depending on how much risk you want to take. So with the 300 pip stop loss, you should probably use a 2 to 2.5 lot size. And then if you have a bigger stop loss, use something smaller. All right. Yeah, no problem. All right, so let me scroll up real quick to make sure I didn't miss any questions. Scrolling up. Let's see. Alan said, Sean, can your brother create a liquidity line indicator? So possibly. Actually, he is working on that. It's just the problem is that it repaints. So like the issue with that indicator, Alan, is that these high lows, they don't become established until 5 or 6 candles later, right? So the issue with that is that if they're not established, we can't have liquidity be drawn right away. So like, for example, here, let me go to the 1 minute. So let me just rewind to like someplace over here. So say we have liquidity like right there, right? Or we have a pending liquidity. The liquidity is not going to get, it's not going to get established until like 5 or 6 candles later. So like, for example, this is fine because 5 candles have passed. I'm trying to find an example where it doesn't stay. Okay, let me see this again. Okay, so that stayed again. Let me see if I could find one where it doesn't, okay, this is an example right here. So it disappears. Right here, you can see that there's only 1 candle after, right? This low is not going to be established until 5 candles later. So if price breaks it, it disappears and the liquidity has to get pushed lower. The problem with this is the fact that it repaints. If it would just stay in place, then, obviously it would make sense for it to be liquidity. I think it's not that difficult for people to just draw it on their own. Like, I feel like it's something that you should be aware of anyways, because you want to be consistently adjusting it. The problem with this too is how I was mentioning before, where if you draw liquidity there, I was mentioning earlier that like sometimes price will break it and I'll leave it there for a bit because price will break it, then it'll come down. And then when it comes back to the retest, it breaks right through it, right? If you had a liquidity indicator there, if you're like too lazy to draw it yourself, then this would disappear and you would miss this entire move. This is why it's important that you guys actually understand. So another reminder, guys, like these indicators are not supposed to be the end all be all. It's not supposed to make you guys lazy. It's supposed to just teach you guys what to look out for. So that's why I don't want to make too many indicators that you guys are relying on too much, because I know that they're useful, but you don't want to be lazy and not actually do any work, right? You have to actually put some work in so that you guys know what you're doing. You're not just, connecting the dots here and then expecting the liquidity lines to be drawn, because you're going to miss a lot of these moves here if you have something like that. So while the indicator is probably going to be made, it's not one that I would necessarily recommend that anyone depends on. It's better to have an understanding as to how this liquidity actually works versus just looking at an indicator and being clueless as to like what it actually means. So it we'll make it, like, I know it'll be a lot easier, but I just don't want you guys to just be 200% dependent on these indicators. But yeah, Alan, my brother's actually working on it. Let me see, is he on here right now? He's not even on here, but I'll talk to him about it. He did create one, but the problem with it is that he can't get the line to extend all the way out like it does right here. He's created one, but the line only goes out like slightly like this, which I mean kind of sucks because you want it to be kind of farther out. But he's created one where the line only goes out to like somewhere like here, which I mean is still useful, but it would be better if we could have it across the entire chart. So I will I'll follow up with him, see if that can be made sometime soon. Jason said, hey, Sean, thanks for the GOAT. I will be quitting my job in April or May before my birthday for sure. See you tomorrow. Yeah, no, definitely, Jason. So I'll see you tomorrow. Now I'm excited for you to get your funded accounts. You have 3 funded accounts within like your month or 2 being with K2. So big things coming for sure for you, Jason. You finally get off that truck and trade full time. All right. So other than that, let me scroll up real quick and see what else I'm missing here. All right. So next question is from, let's see. Ruin's asking, what are the best websites to check regarding Biden speaking because the market typically moves a certain direction when he talks? So I don't have a specific outlet myself, Ruin. The best way to identify it would be CNBC. It doesn't really give you an alert. You just have to refresh it and it'll give you like an update here when he's speaking. Like there'll be like some breaking news or something, or you'll see something that says live right here. Like it'll say live, Biden says US will try to limit Russia or whatever. You can do this, or you can also have YouTube open. I think YouTube is another outlet that you guys can use. The only reason I know that Biden was speaking is because I was at the gym. I'm usually at the gym at the same time every day, and they have Fox News or CNBC on the screen like all day. So what you can do is you can always just go on YouTube, like at any random time, type in Biden live, and then there'll be something that's pending here, like right now. So you type in Biden live, and Jen Psaki or whatever her name is, she's speaking right now. Let this load up. But I don't have a specific outlet. I mean, if you have CNBC Pro, that would be good, but you have to pay for it. So I don't know if you want to pay for something like that. But yeah, if you do have this, just go on YouTube and then just search Biden live. There'll be different videos here. Like earlier today, like Biden was live 3 hours ago. Usually it'll have pending schedules like this right here. So if you just type in Biden live, you can see right here that Biden is scheduled to talk on March 1st. Oops. So the State of the Union address on March 1st, he's going to speak. And they'll usually give like updates. Like if you go on in the morning and he's going to go on later that day or within a couple hours, it'll usually have some sort of live feed that is that's pending. But yeah, it's probably the best option for you because that's what I used to. Unless you're in a place that just has TV on all the time. So it's unfortunate. I know I wish there was a better option, but that's pretty much what we got to work with for now. Let me scroll down a little bit and see what else we've got over here. Solangi's asking, can you show the high-low requirements again? I want to remove the pivots from my 1 minute and 3 minute chart to clean it up, but not sure if we need the pivots or if the trend meter is good enough. So yeah, the trend meter is not required for the high-low, Talanji, but it will help. So I know it does make the chart a little messy, but it does help. So you can just keep it off. And then after you take your trade, you can just put it back on. So the requirements for the high-low right here are going to be, but again, I don't recommend you guys take the high-low by itself. I would recommend taking it with the triple confluence. If you're applying the triple confluence, then it is required because you need to confirm the trend meter. So for the triple confluence, you do need the trend meter and you also need the pivots. But if you're just applying the high-low scale by itself, it's not necessary. But I would recommend that you do use the triple confluence versus just the high-low by itself. Even though it does hit, I don't think it's the safest trade for you to take on its own. Yeah, definitely, no problem, Talanji. Let me scroll up real quick, see what else I'm missing. Okay. Rashida's asking, so to get an FTMO account, we have to join the challenge and pass a process, correct? Yeah, that is correct, Rashida. So basically, let me see if I can pull up the FTMO website. All right, so when you sign up for FTMO, you'll take the challenge. Depending on what account size you're doing, you take the challenge here. You just have to make sure you don't reach the max daily loss. If you're using proper risk management, it should be no problem, or the max loss in general. This should never be hit. I don't think well, it does happen for a lot of people who don't use proper risk management. But if you guys are using proper risk for every trade and you're only taking the quality trades, then this should never be hit. I see the daily loss get hit sometimes because a lot of people like to over leverage or they over trade or they revenge trade. They end up hitting this by accident. But hitting the daily loss or the maximum loss that should never happen. Unless you're just taking a bunch of revenge trades and a bunch of bad trades. So what you do first is you'll take the challenge. Once you reach a profit target, they'll give you the verification account. This is going to be half profit target. Once you pass this, then you'll get your funded account. From there, you'll start to collect 80% profit by month or bi-weekly. I personally just do by the month because I don't really need the funds right away. I'd rather just have one payment than two per month. So, I mean, that's pretty much it. You'll have 30 days to pass the challenge, 10 days minimum. You should be able to finish it within this time period. It's not that much. It's not that difficult if you're using proper risk. And then for the verification, you'll have 60 days, but you can finish within 10 days. So technically you can finish the challenge and verification within 20 days, but you'll have a 90-day maximum if it's necessary. I don't think it's ever going to be necessary as long as proper risk is used, because realistically you need 10% to pass. If you're making at least 2% per day, you should have no problem by reaching 10% within a week or two. But that's why you want to use proper risk with every single trade. So yeah, it's pretty much the process for you. You just got to pass the challenge, verification, then you get funded. Then from there, the following month, you'll get a refund of your deposit, and then you'll also get your first payout. All right, let's see, next question here. Let's see, Victor is asking, is it true when market opens and it's a gap, price will always move back to fill it? Not necessarily. I see a lot of people follow that, or they think that's going to happen. And I've seen a lot of people blow accounts doing that. So here, let me show you where the market opens. So let's just draw a line where market opened. All right, so check this out. Here's a gap that you were talking about right here, Victor. So I'll just clean this up, turn everything off. And here's an example of it not coming back. So here's a gap that you talked about right here, right? Market closed right here, reopened at I'm just gonna put it right here so you can see. You guys can see that there's a gap right here, right? And you can see where price currently is. Price never came back to fill that gap. So I know a lot of people try to use that strategy. I don't know like where people came up with that idea. I feel like when people started telling people that it worked, and it probably worked for like maybe a couple days, and people just kept believing that it would work. But you can see right here, it didn't fill. So I would never use that strategy. I feel like it's a gambling strategy, like thinking that it'll come back like that. One thing that you can do, Victor, is you can just go back and you can just review all of the gaps, right? So go back to like this week. So again, right here, price, here's a gap from the weekend. And here's a gap, right? Here's another example of it not coming back. So this gap right here was from the weekend. I mean, price did come back eventually, but that's like 1,300 pip gap right there. Price just ended up dumping further and further. So if your stop loss wasn't wide enough, you probably would have gone wiped out. It's like 1,000 pips right there. It did come back up eventually, but it doesn't always happen. And like, that's just one way to go test it. So if you go back over here, day before that. Also, I wouldn't be playing with the gaps during like war talk, because it's just, again, right here, huge gap. And I also wouldn't take gaps if it's like going back to the upside, because the thing is, it can keep dropping. So depending on where you got in on this gap, what happens is like there's this, it's not necessarily a strategy, but it's a glitch in the system. What would happen a lot of times is people would try to get this little movement right here, or they'll try to enter a trade before the market closes, and then they try to catch the gap. Like they try to catch where price gaps. But the problem with this here is you don't know where price is going to gap. You don't know if price is going to gap below or gap above, right? So depending on where price is, if you were to enter a trade up here, like say if you try to enter before the market closes, the problem with you entering down here is that you don't know if price is going to push back up or if price is going to push back down. With a gap like this, So let's see. You would hit like 1,000 drawdown. And yeah, eventually you'd probably come up, but if you can't survive this drawdown here, you get hit pretty hard. So I mean, if you want to try it out, Victor, you could try it out. I think this might be a good time to where it would actually work because price keeps bouncing back and forth. But if you go back to like normal market conditions where price is not like bouncing like crazy, then it usually doesn't come back. I'm trying to find an example here where it doesn't come back because I don't want these like few examples here to really outweigh people's way of seeing it. Let's see. It's a gap over here, a Newman gap over here. 1500. Let's see. So like right here. So right here, there was like no, it wasn't really a gap at all. From 15 to, okay, so here's an example of it where it didn't necessarily come back right away. Market closed right here at 13.59. The gap happened right there. If you were to take a sell at this point, okay, so say if you took a sell at this point because you thought price was going to get back down, you would have gone into some drawdown over here before it came back. And this is Asia session. So definitely something to be careful of. But yeah, if you want to gamble, I mean, by all means, I just wouldn't, for me personally, I wouldn't do it because you go into so much drawdown, unless you have like a really small stop loss, or I mean, a small lot size. For me, if I'm doing a 10 lot and I go this far back into drawdown, I'm already in drawdown of like 5,000. And it's gonna play with my mind if I end up getting caught up in a push like that. But yeah, I mean, if you want to play around with the Victor, feel free. And then, give me updates if you find it to work well. But from my perspective and from my experience, the gaps don't always come back. All right, anyways, back to the questions over here. Let me scroll up. Yeah, I don't see anything else here. Solange said 62% long is crazy. Biden must be stopped. S&P is getting crucified. Oh man, let me see. So let's refresh this right now. Yeah, 62% long right now. I think this might push up during Asia session, but then it might just come back down. Well, I mean, this is probably going to get bumped up. What we might see during Asia session is price might continue pushing up. And then as we get closer to London, around like 2200 hours over here, we're probably going to start to see it drop back down. So I think what we might see here is some consolidation, or a lot of consolidation actually. Maybe some push to the upside, consolidation, push up higher, consolidation. And then over here during London, it might drop and come back up. And then during US session tomorrow, obviously it's cut off right here, but during US session tomorrow, it might drop even lower, just depending on where the war talk is. Doesn't seem like things are getting better. Also, there's a live press conference right now as well. Let's see if I can find it here. Let's see, Biden live. Yeah, there's a press conference that's going to be going on in a little bit. So I wouldn't recommend you guys trade at the moment. Where'd it go? I swear there was like a live event going on right now, unless she's already done. Yeah, she might be done. But yeah, I mean, with whatever updates that happen throughout the news, I think whenever something bad happens, price is going to continue dropping even further. That's why I'd be careful. I wouldn't even mess with Asia session. I messed with Asia session last week and I got burnt. So I'm not going to mess with it this. It was happening when those trades were going on. I think we were talking about it the last week. Price was like dropping because like there was like Ukrainian Russia news, and then all of a sudden price spiked up and stopped me out. You guys don't want to get caught in that, even though you think price is going to continue to drop. Let's see if there's anything else here. All right, Ogun, see you tomorrow. Let's see, Runin said, didn't Fed announce interest rates today? I don't think they did today, but I think they're going to. Let me see if I could find it here. Fed interest rates hike. They're supposed to soon. All right, so there's news right here. So on Al Jazeera, they said Fed official leaves door open to half-point rate in March. It's supposed to happen by March or in the next week or so, but I don't think they've confirmed it just yet. But they're going to raise it. I mean, there's no stopping it from being raised. They're going to have to. There's no way. You know, let's check the Fed news actually. So if the Fed news is this week, all right, tomorrow there's no news scheduled. Unemployment claims on Thursday. Okay, so Fed member Mester is going to be speaking on the 24th on Thursday. He's probably going to be giving some updates on the hike. So yeah, Fed member Mester speaks on Thursday, and then Fed member Waller too. So they might be giving updates on Thursday. And I think that's it. Yeah, nothing tomorrow, but there is going to be news on Thursday. Talanji said, I don't know how Isaac does it. Yeah. He uses, so like, from what I've like discussed with Isaac, is he uses a grid system. It's like kind of a hedging system of taking trades. I personally don't. I mean, I think it's, unless you know what you're doing, it's very risky. Basically, like say for example, if you have, so like today we had multiple V3 entries, right? Earlier today, so like right here. So it's kind of like a way of hedging it, where like every entry you see, you just take every single entry, which, I mean, it does work, but honestly, it's a lot of work to be hedging like that. Like for example, here, price comes up, you have a sell, you let the trade run, right? Again, right here, another sell, you just let it run. Yeah, basically in both directions. So I mean, yeah, technically, like if you were to go back and back test the strategy, you can see that I mean, you could lock in a lot of profits, but it's super risky. Like if you lose focus for like 1 second, you're gonna get screwed. Like for example, here, when you do in the opposite direction right here, possible win right there too. So I mean, there's ways of doing it if like you want to be glued to your screen all day. Yeah, exactly. And Jay said, looks like as if he takes multiple entries at the same position as well. Yeah, and that's another way of hedging it. It's a system called a grid system. He talked to me about it. He has an indicator. Oh, it's kind of like an EA. Like basically, if it's something good, like something like this, which is like a high probability of winning, it'll take like 5 entries right there, like 5 at the same exact price point. Or what would happen is, so for here, your TP stop loss would be about like 300 pips, right? The way that the system kind of works is, see how price doesn't hit TP? It comes up a little bit. So you have one entry there, price comes back up to entry, and then another entry is taken at the same exact price point right there. And then at this point, you technically have 2 entries. And then you just keep doing it, right? Goes below, again, right here, it goes for another entry. And there's ways of doing it, but this isn't something that I would recommend people do, because like, you know, if you lose focus for like 1 second, you can get burnt pretty bad. So again, right here, price comes below, it doesn't hit TP yet. It comes back up to entry point, and then you have another one right over there. Yeah, exactly. So Talanji said, wow, kind of smart if you manage the risk. Exactly, yeah. So if you're taking proper risk, you're taking a smaller lot size, and you're taking, somewhat of a normal lot size, you're basically double dipping into the trade if it's like a high probability of winning. Um, Again, it's not something that I would recommend to people, because if you take too big of a risk and you lose one and you lose like one trade, instead of having just one loss, you could have like a 5 times your loss. So it's kind of risky. Exactly. No, it's so Alan. I know Alan over here is getting excited already. Alan's like, so is he using an EA? You could do it manually, or you can use an EA. It's called a grid. So it's technically an EA, but you're just entering a trade. So it's just exactly what I just said. I explained the whole logic behind it. The logic is that price will re-enter as price comes back to double dip. You can do it manually if you want, or you can have an EA that does it as well. It's not an EA where it just automatically takes all the trades for you. It just enters a trade at the same price point. So yeah, I mean, technically it's an EA, but you can do it yourself. You don't have to use an EA. Yeah, Alan said, okay, can your brother make it? Technically he could, but it's not, like I just mentioned, guys, it's not one that I would recommend people would use, because, and I know a lot, like, people are probably getting the idea now to do it. My recommendation is to don't do it, guys, because if you don't know what you're doing, you're going to burn your account. You're going to blow so many accounts trying to do this. It does work, but, and I've used it before. It's kind of like how I do sometimes, right? Like, say, for example, we have an entry here for a sell, and I enter late. Like, let me see if I could find one where it doesn't necessarily hit right away. So let's see. I'm going to find one where it goes into some drawdown, and then, but it does go back into profit. So it's basically just making a late entry. The market was kind of smooth today, so there's not really anywhere it pulls back. Or I guess like the loss that we took this morning, right? So if I go back to that trade over here at 720, so this is where you would get burnt like super heavily if you were to apply what I was just discussing. So like right here, this was the one that we took earlier, right? The one that lost. So if you were to take this trade here and it kept double dipping into the trade, like instead of just losing one trade here, you would get burnt super badly, because right here, price comes down, it comes back up, right? So instead of having one trade there, you'll have two running. So like right there, instead of just having one loss, you'll have two losses. But I'm not sure how the grid works, how it uses it, but sometimes if it comes back below, it'll just re-enter. So again, right there, a re-entry, and then a bunch of entries right here, right? So you can see how it comes back up. And then there's like 1, 2, 3, 4. There's like 6, 7 entries right there. This could be a good thing if it hits your TP, but if it doesn't, you pretty much blown your account at that point. So right here, there's like another entry, and it just keeps stacking more entries on there. So like literally, like thank God it would hit down, but it's not always going to do that where it comes down to TP, because if it doesn't, and say all these go straight up, you're literally account blown at that point, because you've taken like 10 trades. If you're taking more than a 10% risk per trade, or more than a 1%, you probably would have blown your account at that point. So just, I don't recommend people apply that. The reason Isaac can apply it and like certain people can apply that, I used to do it myself too, but manually, is because you need like full focus. Like you have to literally be glued to your screen, and you can't make any mistakes. If you make one mistake, it can be the difference between, blowing your account and making some pretty big profit. So it's not one that I do recommend, but there's a basic idea of like how some people take like 50 trades a day, right? So technically there's an EA for it. I don't know what it's called. It's called like grid. The system's called grid. So if you do some here, let me see if I can find it here. You could probably find it on YouTube. Let's see, grid EA. So I'd be very careful with this, guys. If you guys want to look into the grid system, you can just YouTube grid EA or grid trading, and you can see how people do it here. There's different ways of applying it. I wouldn't go too deep into this, guys, because at this point you're going to start gambling a little bit. There's a lot of EAs that are created for this system, but if the system really worked that well, there'd be a bunch of millionaires out there using the same system. So I would be very careful with using any of these grid systems out there, these robots, because what could happen is if you guys use the robot and you guys can't turn it off, it's going to take like 10, 20 trades on your account. And if they all lose, you're going to blow your account. So I would stick to trading live yourself versus using any of these EAs. So just a warning out there. I know a lot of you guys are probably going to get the idea of trying to use the system because you've seen big profits locked in by certain people, but they know how to use it perfectly fine. Just because they know how to use it doesn't mean that you're going to be able to pick it up as easy. But yeah, I mean, other than that, I think that's it for now. Let me see if there's any other questions. I think that's it. Yeah, Alan said, got to get that Lambo. All right, guys. So we've been on the session for about 2 hours now. So I think that's it for the questions. If you guys have any other questions, feel free to email me or message me on Telegram. I'll take my dog on a walk. This dude's like ready to go out. But yeah, if you guys have any questions, feel free to reach out to me. Otherwise, we'll be holding next week's mentoring session. Let's see. I think we're going to try to hold it on Friday because Kenny wants it to be on Friday. He has work at night, so unfortunately he can't make it to these mentoring sessions. So I want to make it accessible to everybody here. So I think next week we'll probably hold it on Friday. If not, I will give you guys an update. We'll see what day we'll be holding it, but I think we're going to try to aim for Friday next week. But yeah, guys, I think that's it. So if you guys have questions, feel free to reach out on Telegram or email me. Otherwise, I will see you guys tomorrow morning for the next live session as we continue on with the trading week. So have a great rest of your afternoon, guys.